following is a technical analysis on HKD, a company of the technology sector and software applications based upon the daily interval, in which I will cover additional trade ideas secondary to Celsius, DraftKings, and a couple other given trade ideas I believe have reached some key pivotal transitioning points that I would like to see some levels taken out and or back tested off of for additional trade ideas and a great watch list that I believe could transpire here shortly. Taking you out straight into the daily interval of this stock that has just been a rip your face off rally in both directions. High volatility, trades like the VIX. I mean, it's heavily dark, shadowy manipulation, and I believe we've reached a critical juncture based upon a potential double bottom with exaggerated positive divergences, really constructing amongst all four key technical momentum indicators, with the oscillator histogram having a solid green candle close up above. This could be gearing up for the next phase in a potential rally and or beautiful key segment on a complete minor primary downtrend line with major reactionary highs really across the entire space here. And long traders, bull traders need to see a solid infused daily breakout candle close above the 418 price resistance in correlation of the 50-day and 50 exponential moving average, with the ability of the Chinese focusing in on a cratering stock market there in the Shanghai and the Hang Seng Composite. I believe Chinese liquidity injections and or quantitative potential easing and some sort of stimulatory forces could be into play when you consider how dangerous the deflationary wave is continuing to construct there in China. This could be a potential catalyst for a stock with beautiful, exaggerated positive and bullish divergences could be the baseline. Even backtesting and or retesting the 369 price support level would additionally give you the greatest risk reward analysis for the long trade setup to the upside on a potential triple bottom. An infused rally back up to the $399 $4 price support level for 9% in gains, up to the 418 price support for 11.7, 447 for 20% in gains, and then ultimately in correlation potentially of the primary downtrend line and or 200-day moving average hovering in up above here would net you a great, call it 46 to 40, 30 to 40% in gains to the upside. Make no mistake about it, each and every time a rally has ensued, it has acted in a short squeeze-like transaction. Price action is so volatile, it winds up in just straight line moves up. Taking you out to Celsius Holdings, a company of the consumer defensive sector in beverages based upon the daily interval. And this company has had a deep, dark saga for quite some time, years on end, with notable investors, including individuals associated with the 1MDB scandal, where you have additional investors like Russell Simmons and a Shark Tank member. The company's financial practices included a peculiar revenue recognition policy change, acquisitions, and relationships with entities like Funk Foods and Keefing Food Technology are scrutinized, where the SEC had raised concerns about Celsius's accounting and disclosure practices. Along with recent stock transactions and institutional sell-offs, there is a potential that we are gearing up for the next major trend change in what I believe to be a beautiful, well-defined, head and shoulder, classic-looking top. And here we are reflecting upon the 200 exponential moving average and backtesting the 50 exponential and 50-day moving average resistance. With an unfilled and unchecked gap up above, I believe that would offer the most valuable short trade setup to the downside for a scaling in process and setting some stops up above for some key additional targets to be met. Now, where I see the potential of the neckline of the head and shoulder classic-looking top that is correlated, synchronized with the 200 exponential moving average, that will be the key pivotal transitioning point where short sellers, bear traders want to see a solid daily infused candle, big breakdown, sell signal below that primary neckline on a potential backtest and or retest for gearing up for the next move down to the 45.98 price support for an 8.3% crash, down to the revisiting of the major primary reactionary uptrend line support for a 20 double-digit percent crash to the downside, if and when some of these key levels are taken out with conviction. Long traders, bull traders want to see a pop of this 50 exponential and 50-day moving average on a backfill, the gap right back up to 58.60 price resistance, and then an additional reaction there amongst short sellers and or bear traders must ensue. Make no mistake about it, we have negative and bearish divergences continuing to construct and establish going back since May of 2023. Big divergent high. We had them on all 4 technical momentum indicators, and now what has been so present in what transpires in the ultimate near term and biggest inflection point for the technical momentum indicator space is a concealed negative and bearish divergences here in the near term on all 3 technical momentum indicators, with large infused red candle closes dropping below the 0 line threshold here in the oscillator histogram. I believe that the momentum is beginning to wane in the price action of the stock. Watch for these key levels to break and or ensue. Have a beautiful short trade set up to the upside around the 58.60 range, if not a big breakdown sell signal below its primary neckline. Long traders, bull traders want a dollar cost average amongst these key pivotal transitioning points. Add to the long term on a prolonged setup, on a re-challenging of the 5860 and ultimately a big infused breakout up above to re-challenge these near-term negative and bearish divergences that are constructed here on a re-challenging of the big divergent high as well to go on to re-challenge these major reactionary highs up above the 68 level. In addition to a very, what I would call a very aggressive long trade setup up to the 5860 price support level for 15% in gains, ultimately re-challenging some key additional major reactionary highs and lows above the 6126 price range, and then ultimately those major reactionary highs for 35% in gains. Taking you out to the intelligent bio solutions based upon the healthcare sector in the medical device realm, we are breaking out of this beautiful, well-defined major, call it a full year, multi-year primary downtrend line resistance level, and a beautiful bullish falling wedge pattern with exaggerated bullish, big bullish and positive divergences confirmed on all four technical momentum indicators with a new infused oscillator histogram green candle close up above its zero line threshold and a confirmed bearish bullish crossover. Make no mistake about it, that is a well-defined big breakout buy signal here off this key inflection point. And if and when we were to initiate a potential pullback on dollar cost averaging down to the back down to the primary downtrend line and the 30-35 price support in correlation of the 50-day moving average, that would be a horrific 48% crash to the downside, where the masses could fear that would offer the most valuable long trade setup to the long side. Make no mistake about it, it is always darkest before dawn. Major infused rally back to the top of the trading range at 6.38 price resistance for 77% in gains, and ultimately taking that level on a re-challenging on the backfill of an unchecked gap up to the 1238 price resistance would net you 233% in gains. This is a very highly correlated and volatile price actions of a stock. Taking you to Momentus based upon the industrial sector in aerospace and defense here on the daily interval, and once again a well-defined, beautiful bullish falling wedge setup with a nice clean divergent low. We have positive and or bullish divergences constructed on all four key technical momentum indicators with confirmed bullish crossovers in the oscillator and moving average convergence, with an oscillator histogram just beginning to curve and churn to the upside as each green candle close above its zero line threshold continues to grow at an exponential rate. The momentum is beginning to wane to the upside, and an unchecked gap that has been rejected 3 significant days in a row. Long traders, bull traders want to see a solid big candle infused breakout above the 109 price resistance in correlation of the major primary downtrend line resistance, and that would issue in a potential buy signal on a solid green candle close, issuing in the first target to the 161 price resistance in correlation of the 50-day moving average, which would net you 60% in gains, up to the 223 T2 for 131% in gains, 261 for 170% in gains. Make no mistake about some of these stocks, these are highly volatile, and where risk management is the absolute must in trading some trendy volatile securities. Taking you out to DraftKings, a company of the consumer cyclical sector in gambling based upon the daily interval. I believe we've reached an additional key transitioning point based upon the 42.52 price resistance. Call it a multi-year big pivot point with major reactionary highs and lows really across that entire sphere going back since 2020. Call it a 4-year major price resistance level that will get all but guaranteed be respected by any technical traders upon either overcutting it or simply being rejected upon this key transitioning level. There are potentials for which you would call one of the most pivotal, biggest gaming revenue in the sport of the National Football League, in which the Super Bowl is coming across this key juncture that could potentially signal a priced in move. Since the beginning of August has been in a consolidation phase where the NFL season first began, and that was preceded with a backtest and or retest of this primary uptrend line, only to be infused on a big rally to the upside for 56% in gains. Make no mistake about it, this could be the potential for a price in move, where a rejection upon this reactionary price level and or momentum fueled overshoot back into the key range would keep intact a beautiful divergent high with negative and bearish divergences constructed amongst all four key technical momentum indicators. Rejected upon this resistance level in the near term, you will have confirmed divergence here, where the oscillator histogram would begin churning to the downside and coming across waning momentum within the technical space. This is a well-defined bearish rising wedge pattern and a beautiful construction. It could come if and when we are rejected amongst the 42.52 price resistance level. Long traders, bull traders want to see a solid infused big breakout candle up above to go on to re-challenge these divergences and ultimately negate and burn them out in their entirety, only sparking an additional short squeeze setup, big major move to the upside, potentially re-challenging for another double-digit move up to the 47.95 price resistance. Taking you out to Williams Sonoma, ticker symbol WSM based upon the daily interval. And I believe we've reached an additional key juncture here where we may have the beginning structure and or foundation of a decent head and shoulder classic looking top. And this could be the neckline of a potential transitioning point that has been taken out, and a really a big bull and bear battle between the 50-day moving average hovering in and down below. And that is exactly what I would suspect any momentum to wane if and when some of these necklines were to go, which is the 50-day moving average and the primary parabolic uptrend line, which is the major reactionary low transition point that Williams Sonoma has been in over a year, dating back off the June 2023 lows. I see a potential beautiful divergent high. We have confirmed negative and bearish divergences constructed among all four key technical momentum indicators, with the stochastics crashing below its 85 threshold on an all-out volatility to the downside. This clearly suggests momentum is beginning to wane within the technical space, where you have the split of an additional neckline that has been breached off this beautiful head and shoulder classic looking top, which you would call a rising bearish wedge pattern. And that was your initial first breakdown. Now, long traders, bull traders successfully defended the 236 Fibs retracement, call it 191.72 price support with conviction, where you had that major reactionary low. Bulls bought it up, where the strength and validity of that long technical traders infused on a green solid candle close up above. Make no mistake about it, the ball in the near term belongs in the court of the bull traders, and or short sellers will be salivating as at the mouth, including myself, for a solid infused big breakdown sell signal below the 236 Fibs retracement, offering an objective short trade risk reward setup to the downside, only increasing the odds for a much larger drop to come, and a potential backtest and or retest of the 236 Fibs retracement in correlation of the parabolic uptrend line would issue the utmost, most valuable short trade setup to the downside, with a massive air pocket down below the 50% Fibs retracement. I believe cascading effects of stops and or triggers and margin calls could go off in a given juncture when the scope and magnitude of that transitioning point is taken out with authority and conviction, only raises the odds for an all-out technical trader rush towards the exits.